Hi guys. Today we will analyze Travelers company stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The short-term trend is negative, while the long-term trend is still neutral. Not much exciting going on here. Strong support levels are around $160 and $152. Next strong support levels are around $140 and $129. Strong resistance level is around $175. Next strong resistance level is around $187. In the last month the stock has been trading between $157 and $174 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.1 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average P/E ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $439.86. When we apply the margin of safety to that value, the fair value of the stock would be $307.90. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Travelers is 14.42. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Travelers, analysts forecast growth rate around 5% per year in next 5 years, and future P/E around 12. I will use three different scenarios for Travelers company: bad, average, and good. First scenario. Travelers will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 2%. Future P/E would be low, 11. In this case, the fair value of the stock today would be $80. Second scenario. Travelers will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 3%. Future P/E would be average, 13. In this case, the fair value of the stock today would be $104. Third scenario. Travelers will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future P/E would be high, 15. In this case, the fair value of the stock today would be $131. As you can see, today the stock is overvalued, $161, even if we expect the company's high performance in future. While the company has a medium profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 5% yearly. The stock may look fairly priced at the moment. However, I would use an extra margin of safety with this stock. So, I may consider buying the stock for the dividend, when the stock drops to $130. Do your own due diligence on this stock. Company's strengths. The Travelers Companies, commonly known as Travelers, is an American insurance company. It provides a range of commercial and personal property, and casualty insurance products and services to businesses, government units, associations and individuals in the U.S., Canada, China, the U.K. and other countries. Travelers is one of the largest insurers in the U.S., growing both revenues and profits at a healthy rate. The company benefits from favorable industry dynamics, which allows it to earn economic profits, despite fragmentation and competition. The company continues to produce an underwriting profit, which is great, because it means the firm does not have to depend on its reserves to pay claims. Travelers' conservative investment style should position it well to ride through changes in monetary policy. The diversification of Travelers' business insulates it from issues in any specific lines. Travelers did not experience a material level of business interruption claims from COVID-19, and has little to no exposure to the conflict in Ukraine. Travelers has been raising home and auto insurance premiums. It should improve results over the next several years. Dividend increases and share buybacks should also boost shareholder returns. The company's return on equity of 14%, return on assets of 3% and profit margin of 10% are amongst the best returns of the industry. Risks. Travelers faces macroeconomic risks, related to the impact of slow economic growth and volatile equity markets on its balance sheet, capital levels, credit ratings, revenues and income. Other critical metrics to monitor include the company's exposure to mortgage-backed securities, and real estate. The rising interest rates are having a negative effect on the value of the company's bond portfolio. Travelers has significant exposure to natural catastrophes and weather-related losses, which introduces material volatility into its results. Climate change introduces a new point of uncertainty for insurers with catastrophe exposure, and future returns could be impaired if the price response is not adequate. Travelers' reliance on independent agents does not allow the company to control customer relationships. The company's recent underwriting issues raise questions about whether the company can maintain its historical outperformance on this front. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 5% on average per year. The earnings per share is expected to grow by 7% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.